Hello, we're back again. This is Nate Williams reporting PFG's Doctor Tax Guide, a guide to tax strategy for the dental practice owner or medical practice owner, or whoever you are if you want to better understand taxes. Today, in this five-part series, we're on section 4, which is audit proof. Now, in full disclosure, there's no such thing as audit proof. What we want you to do is be prepared for the day if or when you get audited. There's nothing you can do to eliminate the risk of being audited. What we're talking about today is record keeping and how to be prepared for an audit. So just so you understand, tax returns essentially are selected at random for audit, with higher income earners having a higher chance of being selected. The other way you can be selected for audit is if paper forms don't match, like a W-2 is reported by your employer, doesn't match the W-2 income you report on your tax return, or 1099 income that is reported to you by someone paying you doesn't match what you record as income. Inaccurate tax filings, so you mistakenly file the wrong form, that can cause the IRS to notice and choose to audit you. Transactions involving multiple taxpayers, like partners, where one partner is selected for an audit, that can automatically that can trigger an audit for the other partner. Or if there's questionable treatment of an item on a tax return, that can raise red flags and cause you to be audited as well. If you are audited, you are going to need to prove two things for each expense or each deductible expense that the IRS wants to look at. First, that you actually incurred the expense. And the second, that the expense had a business purpose, or as I explained earlier, that the expense was both necessary and ordinary for your line of business. So for the first part about actually incurring the expense, the easiest way to do this is just to use your business credit card or your business checking account. And if you do that, our accounting system will capture all of that information, and it will be very easy to show and to prove to the IRS that you actually incurred these expenses. But the second is where you need to be more careful. Careful doctors will keep records of expenses that are considered personal in nature, such as travel, meals, etc. The IRS, if you incur an expense for a lab bill or dental supplies, the IRS probably isn't going to question that had a business purpose. But if you have plane tickets to Hawaii, the IRS might want to look at that and say, explain to us how this was a business expense for you to travel to Hawaii. So, question, what if you have incomplete records? What if you can't prove that the expense was incurred? Or what if you can't prove that it was actually a business expense, like the trip to Hawaii? Well, if you don't have complete records that prove these things, both that you incurred the expense and it had a business purpose, you'll need to make an attempt to provide sufficient evidence with these elements. First, your own written or oral statement. You can testify to the IRS, essentially, that trip to Hawaii was a business expense. You were there for a continuing education course. You can share a written or oral testimony of that. Or you can provide other supporting evidence to support this expense. For example, a picture of you at the CE course in Maui. That would be a piece of evidence to show that you were there actually on business. So the next question is, what records do you need to keep and for how long? At PFG, we will retain all of your tax returns indefinitely, including all of the information that you provide to us to prepare your tax return. We're going to keep all of that information basically forever. We recommend that you retain records that you keep, especially records that provide evidence to the business use of these deductions. We recommend that you keep those for a minimum of 5 years for income tax records. And primarily, we want you to focus on perk type expenses. For example, a log for business miles driven, or a travel log for showing the nature of travel that you incur. Expenses relating to depreciable assets, such as the purchase of a cone beam scanner, like those invoices, we recommend that you retain those records as long as you own that equipment, basically indefinitely, unless you get rid of that equipment and we take it off of your books. And practice records like patient records, x-rays, things like that, we'd recommend that you refer to your state dental board and follow their guidance. This is pretty easy. Audit-proof record keeping. Hopefully this is simple. If you're a PFG client, we try to make this as easy as possible for you. Hope you have a nice day and this was helpful.